HDFC Bank's numbers were strong, but there were plenty of one-offs within the numbers, and I'll explain that to you. Maybe first start off with the margin number. The margin shrink was a bit of a disappointment because from 3.46% margins have come to 3.35% now, and will continue to shrink very likely basis whatever management is saying. The worry is that HDFC Bank needs to bring margins to 4%. The margin is nothing but the differential between you, which is customers depositing money into HDFC Bank, and the rate at which it lends. That differential is what it makes in margins. Now, margins are obviously shrinking because the repo rate has been cut and loan rates have therefore come off, but deposit rates, especially fixed deposits, are still at the old rates, maybe 4, 5, 6 months ago, and therefore that differential still needs to go up. So, but right now that differential is shrinking temporarily. That unwind will likely happen 2 to 3 quarters from now. But for the moment, that was a bit of a disappointment, right? Because one, that shrink is happening because of the repo move. Second, because of the merger, the margins have shrunk sharply. So both of those need to unwind now. So therefore, more pressure where margins is concerned. The second piece was the other income. There was a one-off there. HDB Financial, obviously IPO happened, 9,000 crore of the proceeds coming in, or rather the profit coming in, and that was completely knocked off by more buffers created on loan loss provisions. So HDFC now has loan loss buffers more than 35,000 crore on a book size of around 25 lakh crore. So that's the kind of ratio you're looking at. So they've chosen to churn this profit and use it as a buffer against provisioning. So that doesn't add to book value either. Now, when you're looking overall at the number itself, the profit after tax number has come in slightly above what most were penciling in on the street. So that is likely a positive. So with all of these one-offs as well, you've come out with an EPS growth of around 11% on a YOY basis, 2% on a sequential basis, which doesn't look bad optically. So overall, it's a decent set. What you'd want to see is loan growth for the full year FY26. If that comes in line with market, that could well be a bit of a spark for the street. And FY27, if they can accelerate loan growth, really that will be the question that should really push the investor to look at HDFC Bank. That will be the big one to answer. That and margins. If they can repair those two, that could be big positive.